Assalamu alaikum. I'm very pleased to be here to present to you Bank Alfalah's performance for 2024, our current strategy, and our future outlook. The bank has grown significantly, exceeding 1,100 branches across 240 cities in Pakistan and 11 branches in 4 countries outside of Pakistan. A major achievement for us has been to get a long-term rating of AAA and a short-term rating of A1+, and the outlook for the bank has been considered stable. In terms of growth of deposits, we have had quite a tumultuous year in which a number of regulatory changes allowed us to make adjustments to our strategy. The bank continued to focus on market share as its key driver, and in that deposits were retained at 6.4% of market, while trade grew to 8.4% and imports significantly grew for the bank. Our home remittance business continued to perform extremely well with a market share of 15.6%. I am very proud of the fact that we have received awards from 20 plus platforms across the country. And the top ones, of course, that we are most excited about are the PBA Best Bank Award for Digital Banking, which we received for the 3rd time running, and also the Best Bank for Customer Engagement, which is something that we have done for 6 times over the last 9 years. We are also very happy that we were ranked amongst the top 5 best performing companies by PSX, and also amongst the top 10 companies in Asia Pacific. In terms of financial performance, our net markup income went up by 1%. This, of course, was affected by the environment in which interest rates have been declining, and therefore banking spreads have been compressed. We also had to face the impact of advances to deposit ratio tax, which created a behavior in the banking sector whereby deposits were being compressed while advances were being grown at even smaller spreads. The net impact of that was that net markup income did not grow as robustly as it has in the last few years. Our non-markup income, however, grew quite handsomely at 55%, which also includes capital gains that the banking industry has seen, and also very good exchange earnings that we made on the back of our trade and remittance businesses. Our fee and commission income went up by a strong 11% and reflects the increasing transactional volume through trade, remittances and payments. The bank's expenses went up by 28%, impacted by the high inflationary environment that we continued to see in most of 2024, but also reflects the continuing investment that the bank has been making in technology and digital banking. This also includes consultancies and marketing costs that we incurred over the last year. On the deposit side, as I had mentioned earlier, there was an effort by the banks, including ourselves, to keep the deposit growth at a lower number. Hence, our total deposits grew by only 2% to reach 2.1 trillion rupees. Because of the impact of the advances deposit ratio tax, we took that opportunity to also fundamentally change our strategy in respect of deposits. So instead of period end numbers to push that at a reasonable level, we have been moving towards average numbers to be the determinant of performance. And therefore, we will continue this strategy going forward, even though the ADR tax has been removed. We will continue now to push average deposits as our key target and our key focus. And in that sense, comparison with the rest of the industry will be difficult because generally average deposits are not reported by the industry. However, we are quite focused to ensure that deposits overall grow, but not necessarily to push unreasonable period end deposit numbers. Advances grew by 50% to reach over 1 trillion rupees, and this was also a specific push that we made to make sure that our ADR ratio went over 50%. So we ended the year with an ADR ratio of 54%. Also, on the back of this growth and a very controlled risk management environment, we were able to ensure that our NPL infection ratio declined from 4.8% to 3.7%, and our NPL coverage ratio continued to be a strong 110%. Our capital adequacy ratio is strong, continues to reflect the significant strength of the balance sheet. The ratio was 17.96%, which is comfortably above the regulatory requirement of 11.5%. On the back of this financial performance, we were able to increase the dividend payout this quarter, and it went to 2.5 rupees per share as compared to 2 rupees in earlier quarters. And the full dividend for the year was 8.5 rupees per share. So we are confident that the bank's strategy that we have outlined for ourselves for a 5-year period ending 2028 is continuing to give good results, and we will focus on the key elements of that strategy in the years to come. And just to remind everyone, those key pillars are to grow market share in the key customer segments and business areas that we want to focus. Number 2 is to continue to try to become the leading transactional bank in the country by investing in technology and also to push the segments that we are focused on. Number 3, the core of our strategy will continue to be a strong culture, strong human capital, and a very caring culture that we have, which leads to a CSR activity that is probably unparalleled in the banking sector. We have contributed very generously to the flood relief program and rehabilitation program, but since then we have also increased the CSR regular annual budget also, and we will continue to do that in the future. We are focused on innovation and improving efficiencies, and a number of our initiatives over the next few years you will see will inshallah bring out the results of our improved focus on cost efficiencies. We also are, as our last strategic objective, focused on a number of new initiatives which will focus on building our strength in new markets, particularly the UAE market, and also focus on creating investment banking as an area of strength for the years to come. In conclusion, I am very proud to tell you that the bank is well on its way to meeting its strategic objectives that have been set by the board. The board's commitment has made our bank forward-looking, resilient, and focused on creating long-term value creation based on customer centricity and innovation. Progress for us is the only way forward.